All right, do you guys struggle or get nervous when you see a lead that has a client that's over 60 years old, mortgage protection, and you're worried about that type of sale or what you're going to go through in the home? Stick through the video. I'm going to go through how I probably tripled my sales in that age bracket with just a couple of setup questions. So stay tuned for more. Hey guys, John Wetmore here. I'm going to run through my in-home for age 60 plus mortgage leads and kind of what I learned going through these. And when I first got in the business, if I got a lead that said, 72-year-old widow or whatever, I wouldn't even call it, because I went through this stage where those were very difficult sales. I would get objections like, I want the entire thing covered or nothing. That's not enough coverage for the money. I got to talk to my kids. Things like that were the big objections at that stage. And when I was new, I kind of thought if someone was more in line with my age, it'd be an easier sale. What I learned when I tweaked a few things is that actually became my favorite sale. In fact, at my company, I became the #1 final expense producer. And it's not because of final expense leads. It's selling them a whole life product based on protecting the mortgage. What I'll tell you guys is, mortgage protection doesn't mean like mortgage payoff. It just means making sure that the family doesn't lose the mortgage. So for me, it was all about the setup. And what I learned is, especially with someone that's a widow, but for sure people over 60, their main priority, if you will, is making sure that they aren't a burden on their kids. That's what they're all worried about. That's their biggest concern for sure. Certainly if there's a spouse involved, they don't want to leave the spouse in trouble, but by far the #1 concern for these folks is their kids. So I'm going to start with the setup of like the widow, because slightly different the way I approached it, and actually much easier for me. So say 72-year-old widow, husband passed or whatever, and she's got a couple $100,000 mortgage. For me, it's all about, I get in there, certainly I'm going to do the normal and build a little bit of rapport, go through some type of financial inventory where I'm getting mortgage payment and income and things like that, just the basics. But the setup for me, and I did this 60 plus 100% of the time. If you were over 60, I went with this route, and we call it buying time or payment protection, where I'm gonna basically be attempting to cover mortgage payments for a couple years. I sometimes would find myself in the middle and wavering on whether or not I should sell them a term or a whole life, and sometimes I'd be in real deep and I'd find out they weren't eligible and I'd have to backtrack, and I just got tired of kind of wavering. So I committed to do 60 plus, I'm just selling you buying time no matter what, unless they arm wrestle me for an alternative. So for me on the widow, once I go through the basics, I can go, let me ask you a question, Mary. I'm assuming if you're like most people that I sit with, your main concern is not leaving a burden on your children. Is that fair? They will all say yes. Nobody's ever said no to me on that question. I go, got it. And again, I know about the kids, whoever the kids are, maybe their daughter's name is Susan, All right, Mary, my assumption is that you want to make sure that, and I find out about equity as well. So my assumption is you want to make sure that your daughter receives the equity in this house, doesn't have to pay her mortgage on top of your mortgage when you pass away. And you don't want to leave that burden on her for her to have to, choose between, Christmas presents for the grandkids or keeping your home afloat so it doesn't foreclose, and that way she can get the equity out of it. And again, they're always going to agree with that statement. Sometimes in there I would even ask, just so they could process it more than I didn't think they really understood it, is, Mary, do you understand what happens if you pass away and your daughter doesn't make the mortgage payments? Do you understand what happens? I was shocked to learn like half the people weren't 100% sure. And let's pretend they got 50 grand equity, 100 grand equity, whatever it is. And I can project that out. If they're not going to die tomorrow, maybe in 5 years, 10 years, they have X amount of equity. I want that number to be bigger, preferably, so they can understand what it feels like to not have that go to the kids. And I can go, all right, do you understand if you don't make the payment that the bank just takes the house, right? And do you know that they keep all the equity? So you got 50,000 in equity now, maybe you'll have 100 grand by the time you pass. You understand that money won't go to your daughter, the bank will keep it. Do you understand that? And again, a decent amount didn't really understand it. So I said, all right, my goal today is to make sure that when you pass, that burden isn't there for your children, and that equity goes to them once they sell the home. So my goal and what most clients do, the reason we do this, certainly I could sell you a big old insurance policy, but I'm assuming you don't want another mortgage payment. You just want to make sure that the home passes properly and the equity passes properly. Is that correct? They all say yes. I go, all right, well, what we're going to do then is we're going to look at some options that give her a year or 2 years worth of mortgage payments so that when you pass, your daughter has the money to pay the bill every month for a couple years, put it on the market and not worry about it. As soon as she sells the house, she gets the equity, puts that in her pocket, and life is good. And you have a smaller insurance payment, less insurance, and she still gets to keep the house either way. And I used to make a joke like, now if you want a big old insurance policy, my boss would be fired up for me selling it, but it's not what I recommend to most of my clients. Does that make sense? And I'm really selling the concept first to make sure they're on board and on the same page, because if I have to dive in deeper or explain it a little clearer, I will. But once they're on board with the concept, then it's very easy to, again, go through health questions. Because then, then it was like, all right, well, here's what we're going to do. I'm going to ask you some health questions, see what plan you're eligible for. I'm going to show you a few prices. You're going to pick one, and we should have you insurance in about 10 or 15 minutes. Is that fair? And they usually say yes. If they say no, I go back to the why, what we talked about. But most will say yes. And I literally, if I got 10 of these leads, I bet I'd trip over selling 1, maybe 2, to where when I changed my in-home to be this way, give me 10 of those, I'll sell probably 8 of them all day. And it just became a much easier transition. Now, if it's a couple, slight variation. The problem is there, typically that person doesn't want to have to sell, but they're probably going to be required to. I also know at that age, most people tend to downsize, move in with grandchildren, because I don't want her to say, yes, I want to keep the house if he dies. That's not the preferred answer, because now we got to cover the whole thing. And if they don't, I get that objection again. So what I want them to do is agree that they're going to sell, downsize, move, etc. when he dies. And so it's just a leading question. I find out the details about the financials. I'll assume he's making more money than her in this case. It's like, all right, Mary, if you're like most of my clients, my assumption is that you're going to want to downsize. You probably don't want to live in this big house by yourself, the home he died in. Most clients tend to move closer to kids, more importantly, grandkids, move into maybe a smaller apartment, a senior living, something like that. I'm assuming that would probably be your path eventually. Is that correct? Again, most people are going to say yes. If they don't, certainly we can have a different conversation. But my questions are leading to where the majority will fall, because if I can sit 10 of them and get 8 of them in, I like the same line of questionings. Certainly if they just adamantly say no, I will stay here. Then I can ask a simple question like, what's more important, covering the entire mortgage no matter what the cost, or your monthly budget? They will always say monthly budget. And so I can get them back down. Now, if they're going to pay for the whole thing, not all about it, but very rarely will they. So again, normally they'll say yes, that I am probable to do one of those things, downsize, sell, whatever. And I can go, okay, got it. Well, here's what most clients do. Instead of covering the whole mortgage, and it's the same as the other deal now, instead of covering the whole mortgage and having a big old insurance policy with another mortgage payment to take care of it, you guys can actually solve this problem. Have you ever heard the statement where, like, when someone dies, you shouldn't make a big financial decision for like a year or 2? They say yes. All right, what we're going to do is we're going to put a policy in place that makes sure the mortgage payments are made for 2 years. That way, Bob, when you die, Mary doesn't have to make that big financial decision and run from the funeral home to the real estate office, and she'll have the mortgage paid for a couple years. It'll give her a chance to list it, clean it up, take care of things, retain the equity, and use that to put down on a smaller home or decide where she wants to live. Does that all make sense? And again, a majority of them will say yes. They'll fall in line because that's normal, and that's what people do at that age. And then from there, same thing. All right, got it. Well, here's what we're going to do. I'm going to ask you some health questions, see what plan you're eligible for. I'm going to show you guys a few pricing options. You guys will pick which one fits your budget today, and we'll have you insurance in about 10 or 15 minutes. Is that fair? And a majority of them say yes. If they say no, I back up and talk about the things again, or that's not a client for me and I leave. But for me, that's getting me about 80% sales on the ones I sit at that demographic, and it became a much easier sale. And again, certainly it's a whole life final expense type product. And that allowed me to be the #1 final expense producer at our company for a couple years, not running final expense leads. And it by far and away became my favorite lead type to run. So hopefully that helps. Later, guys.